Hey guys, welcome back to another video, and today I'm here to talk about three stocks that you guys should buy right now. I think that all of these are stocks that are on the uprise. They look very, potent for breakout, and if you guys do enjoy this video, be sure to smash the like button. It really helps me out. I'd really appreciate it. Also, subscribe to the channel. We're nearing 500 subscribers, about less than 20 away right now, 16 away. So if you guys do enjoy this video, be sure to hit that too. And without further ado, let's get right into it. So the first stock we're here to talk about today is Elf Beauty, ticker symbol ELF. If you guys watch my videos, you know I'm a big fan of Elf stock. I'm invested about almost $5,000 into Elf, returned almost 70%. Got this one when it dropped. In the past year, you see they had a pretty bad earnings, a lot of scares from the tariffs, and it got all the way down to below $50. Should have dollar cost averaged a little bit more down, but it's all good. This is a stock that is relatively cheap right now towards its all-time high. We look at the stock in the past 5 years. We see that it was once worth $217. This is also a stock that people are saying is a pretty good buy, 88%, and they also beat on earnings a lot. So this company has very good fundamentals, and they also have very good management. So as a little sneak peek at the next stock, didn't mean to click that. But Elf, we see right here, this is their investor relations or their earnings of Q1 of 2026. These are their projections for 2026. We see that they project a net sales increase of 9%, adjusted EBITDA of 12, and then a BPS of 210. We see that this company is one of the only ones, 26 consecutive quarters of net sales growth and market share gains. They are one of one cosmetic brands out of 988 to gain market share for 26 consecutive quarters. The only company that's done this in the Mag 7 is NVIDIA, so it's a little relation right there from Elf to NVIDIA. I don't hate it. And then we also see that their Q1 progress, they're projecting 15% today, but it was 7% in 2022. So they're number one in unit share and then number two in dollar share. So this is one of the biggest beauty companies right now. And we see that their pricing, they're actually going to increase it by $1 worldwide, effective on August 1st. Do I think people are going to stop buying Elf because their price increases by $1? No. Do I think the top line is going to increase? Yes. Elf's going to make a lot more money, and no one's going to, bat an eye at it. I really like to see that. We see their Target dollar share. This is the fastest moving item in Target brands. They actually just got into Walmart as well, and they're also in a lot of Dollar Generals. That's a very new deal that they have right here. You see their BPS is up over 1,000, almost 2,000 on that. So you see that they're in 80% of stores for Dollar General. That's over $20,000 people. And then we see that they have 60% dollar growth from shoppers new to Dollar General. 53% of shoppers are new to Elf, so they're getting a whole new customer base by being in Dollar General. And they continue to grow, and they're being put inside of new retail spaces. We see that their prices are very competitive amongst their peers. They're the number one cosmetics product on elfcosmetics.com is this Halo Glow Skin Tint. So another thing about Elf is they actually are not only cosmetic, they are also in the skincare space, which is a very fast rising space. I like it a lot because this actually opens up to the male audience. Some men do wear makeup, but the majority of men do not wear makeup. But a lot of them do use skincare. A lot of men are starting to use skincare. So we see their skincare penetration from fiscal year 2020 was 8%, and now in 2025 it's 18%. So Elf is starting to, get into that skincare space, which I really like. We see 91% of people prefer brands that are funny. That's not very important. We're getting into a pretty non-important part of this presentation, but I do really like that Elf is big in the cosmetics scene. They're trying to expand in that regard. They also, have the skincare, which is amazing. I really see a big market for that in the future. And then they also have the international aspect of their business, which they're expanding ever so much. They have 30% net sales growth over the world. So that's great to see. So I really like Elf right here. I think that 125 is a fair price to pay for it. I think there's a long ways for Elf to go up, and even if it drops, I think you can dollar cost average down. So I really do like this company right now. For stock number 2, let's get right into it. We have this being Shopify, ticker symbol SHOP. Shopify is a stock that's had quite the run here, actually. Year to date, we can see they're up 31%, but in the past year, they're up 92%, and in the past 5 years, they're only up 36%. So this company was up a lot during the coronavirus, which has since subsided, and we see that right during that time, people were thinking everything was going to transition to online. There was a lot of fear in the market. They reached an all-time high, and then right after that, they actually dropped to $27 per share, all the way from $169. So Elf has had its fair, turns and, wins in the company. But we see that their market value, or my market value, remains at $800 in the stock. Not as much as I'd like it to be, but up 141%. I can't complain. Not a big part of my portfolio, but I do very much believe in Shopify. I do want to make this a bigger part of my portfolio. We see the market cap is $183 billion. This is a large company, to say the least. Very highly covered by the news, and we see that every earnings they're beating. So let's take a look at their investor relations presentation. So this is an overview deck for Q1 of 2025. We see their revenue in Q1 is up 27% year over year. Not a lot of companies are growing at those kind of margins, those kind of rates. So I really like to see that from Shopify. And, not even in relation with their financials, I really like Shopify's, market share in the space that they're in. Their management team is great. You can look into their CEO, who's on their board. But I do really like the space that they're in. Shopify is in a very fast growing, high margin area of business with the e-commerce and the online stores, and a lot of people are transitioning to shopping more online. It's a very future-proof business model that Elf has here. We can see also that if we go down, Elf is expanding into more of an ecosystem style business. So there's Shopify Payments, Shopify Capital, Shopify Balance, App Store, Themes, Shipping, Pay. There's a lot of things that Shopify is expanding into that kind of reminds me of Apple. So Shopify is not a tech company, but they are creating this ecosystem that a lot of great companies create, such as Apple, Amazon with Amazon Prime, Amazon TV, Amazon, all of those things. There's Microsoft. Every one of those companies, Meta, they have ecosystems. Like Facebook Marketplace also has Facebook. But Shopify is starting to expand into those things. So if those do stick, then I really do see Shopify, solidifying themselves up there with some of those huge companies that do have those, solidified ecosystems, and they are widely used. I mean, when you get an Apple phone, you're, automatically opened up to Apple News, Apple TV, Apple Pay. There's a lot of things that they have that are just through the Apple brand name. And we see that Shopify is actually expanding into this space, and I really like to see that Shopify is getting into this. There's a lot of money to be made. So, not regarding that, you see that the numbers are great. 27% 5-year compounding annual growth rate on their monthly recurring revenue. This is one of the best business models to have in the stock market is, if you have monthly recurring revenue, this is like, for example, let's look it up on Robinhood right here. One of the best companies that would have been to invest in is Costco. Costco pays a 0.5% dividend. They're a $418 billion market cap company. And at all time, they're up thousands of percentage points. Very great company to invest into. Their whole business model is reoccurring subscriptions, reoccurring memberships. And that's that's a pretty guaranteed way to make money as a business. And if you can get people on that, then it's looking pretty good. So I do like that Shopify is growing their reoccurring revenue, and that's monthly, that's not yearly. So it's compounding even faster. Really like to see that. And if we take a look over here, we see their subscriptions continue to increase year over year, 620 million, up 21% year over year. Really like to see that, even when the world's back to normal, there's no viruses or anything. Shopify continues to grow their online space and continue to do what they're doing with their business model. I really do like to see that. And yeah, there's a lot of numbers you guys can look at if you want to. This is the Shopify investing presentation. Really do like this company and what they're doing. And I think that, at this price, Shopify is a great buy for you or anyone watching. Definitely, I would get in right now. You can see all time this is not, that high for the stock's price, and I think that they're going to break out from here. So if you guys do want to get Shopify, I suggest that. The next stock that we have on this list, actually, if we go over here, we can see Amazon. So Amazon is a great company. I mean, this is one that you probably maybe want to build your portfolio around. I'd relate it to, Meta if you got it earlier, or Google right now even. But Amazon is one that's relatively cheap in comparison to a lot of these other Mag 7 companies. We see that they're actually up 15% for me in my portfolio, and year to date they're up 3%, which isn't that much. So that's the reason why I think Amazon is a great buy right now, because this company is worth a lot more than what they're trading for. Their PE ratio is 34, relatively regular for this sector in the stock market, but they're one of the highest, they have one of the most employees in the stock market. They're providing all of these jobs. I think that their business model is so sound that nobody can really even touch Amazon. You see they're beating on every earnings. This is to be expected. Amazon's a great company. Let's take a look at their financial results, where we can see their net sales are increasing 12%, 13% year over year. And you see that North America is the biggest, but international is growing a lot. And then AWS, their Amazon Cloud, is also increasing a lot, which I really like to see. Their operating income is up 31% year over year. That's very good to see as well, at 40% true to the money. And then also their net income is up 35% year over year. So the growth rates that they have in these segments are honestly, unseen in the stock market of this level. That's why the company is so great. That's why the PE ratio is so high, because they're growing at 30% compounding annual growth rates in these categories, 40% compounding annual growth rates, and we see even here international, their operating income is up 448% year over year. That's a pretty big number to be up. Also, their segment results, we see AWS, they're actually up a lot as well, up 9% year over year, up 17% year over year. So AWS, with that being up, I feel very good about that. We also have, Amazon is making investments. Their TTM is down a little bit, but I'm not worried about that. And a lot of things that's going on with Amazon, I think that, you really do want to get into this company right now. They look very good. A lot of prices right here, we see their free cash flow is dropping, but I'm not worried about that at all. I think that Amazon's just making more investments, and they're going to, better prepare themselves for the future, which is great. This is a company that is prepared for the future for sure, and they're a great company to base your portfolio around if you do want to make this your main investment. I think that that's not crazy. That's very, good centerpiece for your portfolio. And yeah, that's all I have for today's video, guys. If you did enjoy, be sure to smash the like button. Also, subscribe to the channel. I'd very much appreciate it. We're actually really close to 500 subscribers. If you guys could get me there, I'd really appreciate it. 1,000 next. Thank you guys for watching. Catch you in the next one. Peace.